What's going on, YouTube? Today I have a special episode. I'm doing the podcast. I'm talking to rich people. I'm talking to people with credibility, and we're going to be interviewing them. Today I have a special guest, Jake Ryan. We're diving into the market, diving into NFTs. We're talking about altcoins. We're talking about cryptocurrency, long cycles, short cycles. This guy has a lot of credibility, and I need you to pay attention. So moving forward, I'm going to pass it off to the podcast. Keep watching. I'm here with my friend Jake. We're going to be talking about cryptocurrency, the market. It's much smarter than me, I'll tell you that much, has much more credibility. So you probably want to listen to him. So go ahead and Jake, introduce yourself. What are you doing?
Hey, how's it going? Let's see. Yeah, I run a crypto fund here. Got a book coming out, just came out in December called Cryptoasset Investing in the Age of Autonomy. I've been in the crypto space, investing in seed stage equity for blockchain companies in 2015 is about when I started then, and probably bought my first few Bitcoin in 2016.
Oh man, what price did you buy Bitcoin at?
I had to look back. I think it's like $650 were my three first Bitcoin.
That's good, man. I got in early, but it wasn't Bitcoin. I got into Ethereum at like $3 to $7. So I think you beat me on that one.
You're
Uh,
winning. You're still winning.
you're by percentage gains, but you got in a lot earlier. So that's good, man. So just a couple of questions I want to ask you, considering your background and everything like that. So you tell me a little bit about yourself when it history wise. I know you gave me kind of the brief overview, but like, where did you really come from when it comes to like your financial background?
Yeah. So I got a degree in computer science and spent most of my time in the technology sphere. In university, I wrote an academic white paper in artificial intelligence, and it was really focused around using artificial neural networks for cybersecurity. That went on to get like 700 Google Scholar citations. And so that was a pretty popular academic white paper. But I started my career really in software development, and I started my own consulting firm in 2001-2 timeframe. We had big clients like American Express and SAG-AFTRA and Fox Sports, and spend a lot of time just building systems. Probably, yeah, again, in 2014 or so, I started doing the angel investing and early seed stage investing. 2015, I invested in my first couple blockchain companies. 2016 started with Bitcoin investment, and really just fell down the rabbit hole in 2016. In 2017, who couldn't get excited about 500 to 1,000% returns? I was looking to do a switch career-wise, and I wanted to. I had been options trading and trading public stocks and that for a couple of decades at least. And so the combination of economics and a technology background and investing, I started my own crypto fund. And that was about the time I started to write some of the early thesis to the book that is now just coming out.
Tell me about your book. I want to hear all about it. Give me like the brief breakdown of what's going on. I saw it. I just haven't had time to order it and
Yeah,
stuff like that. So break it
sure.
down for me.
So I think the big overarching thesis there is that we know what drive those short wave economic cycles, and that's typically credit. But the long wave economic cycles, those 50 to 60-year cycles, are driven by technological revolution. Carlota Perez has this great book called Technological Revolution and Financial Capital. And she breaks down the last 200 years and the last 5 technological revolutions, starting with like the industrial age and then railroads and then oil and automobiles, ultimately the last one being the age of information with the internet. I think we've had a new technological revolution begin, and I think we've seen evidence of it for the past 10 years or so. And that's been in automation. We've had AI, IoT, and robotics delivering on automation. And that's been powerful, but it hasn't been transformational. The last piece of the puzzle is cryptocurrency, because it allows us to transfer economic value without human intervention. And so as these 4 technologies converge, businesses can build autonomous operations. And businesses that don't have autonomous operations simply won't be able to compete with those that do, because autonomy is the ultimate competitive advantage. And so that's really the crux of this book. and that investing in the new public infrastructure, the public financial infrastructure, that is crypto assets and blockchains, is really where value is going to accrue over the next few decades.
Okay, so let's break this. I understand briefly what you're saying here. So in the context of cryptocurrencies and money in general, right? And from my understanding, you're saying autonomy in specific technologies, right? And then uh, explain to the people that maybe might not understand this on a high level how that would play out with a currency and why it's so important to be in money, have the autonomy in money.
Yeah. So let's think about people are building what we're calling autonomous protocols on smart contract platforms like Ethereum. Uh, one of the early ideas, or one of the early instances of these autonomous protocols, is something like perhaps Compound or Stakes Ray protocol, and or Yearn Finance, and it's allowing people to put down collateral, put down an asset, and this autonomous protocol will go out and give you the best interest rate that any of the service providers are providing. 24/7, it's looking for the best rate for you. No human is going to be able to compete with that, right? And so these are the very early stages of autonomous protocols. But think about it on a grander scale. Let's think of like a new age, new farm, like how we're going to run an entire farm of food production. We could have IoT around the entire farm, giving us sensors all around the farm. We have robots for weeding and planting and doing all the rote physical labor. We have all of those sensors going back to AI agents that are able to make real-time decisions based on past profile data, and then really adding blockchains to it allows us to then be able to act either by physically buying futures or buying product or buying various things on decentralized marketplaces in real time based on those AI agents. And so those autonomous protocols, while in their infancy right now, are growing. And I could see a future where easily one autonomous protocol will have vastly more value than any factory that's ever been in existence.
Because they all kind of connect in once and they're run by themselves. So there's no like human intervention. It's so much more efficient. I understand it from that perspective. On this channel, we were talking about DeFi before, before even last year, August, and we were screaming at the top of our lungs and stuff like that. So obviously you're bullish on DeFi.
Yeah.
You're bullish on that side of the market, and so are we. So the way I've been looking at it in the last couple of months, I've kind of been seeing a new trend, and you tell me if I'm wrong or what your opinions are on that. And I've been seeing a lot of NFTs, right? It's NFTs. We got Logan Paul, we got Gary Vee coming out. What's your thoughts on the NFT kind of craze going on right now?
Well, that is in a real infancy stage. I think we're really still just throwing some paint at the wall, throwing and trying to see what it fits. I mean, that will be transformational. I mean, where and how we apply NFTs to the world in and of itself will be a huge thing. Every mortgage, every license, every intellectual property, every financial instrument, everything will ultimately probably end up being an NFT, right? Right now, we're playing kind of in the digital goods and metaverse and art space where we're creating unique items, digital items, and those are getting bought and sold. I think it's extremely interesting. I think that's a part of the market that you're going to have to get real specialization in to make a consistent profit in. And I wouldn't say I'm an expert in that level, but I think it's interesting.
I'm on the same thing, and it's funny you said the throw the paint at the wall thing because I say throw darts in the dark, like at just trying to find something. So you're thinking along the lines of like kind of the killer app being more in DeFi because it's more tangible, right? And it's probably a real trend that's going to last, correct?
The killer app of DeFi is yield, right? There is no place in traditional finance where you can get yield right now. And to be able to generate, 8% return on a USDC stablecoin, or being able to generate, 5 to 30% returns, either using centralized or decentralized finance, that is the killer app. I mean, that is what people are looking for. And so I think in the beginning of the year, my fund's annual letter I think I said something like, we're starting the year at 15 billion in total value locked of DeFi, and I expect the year to end up over 100 billion in total value locked. Well, I think on Valentine's Day it was like 45 billion already. So I mean, we're going to see astronomical amounts of capital being locked up in decentralized finance. I wouldn't be surprised if it were $500 billion at the end of this year.
So anything that generates the most yield, probably the thing to look out for. So I saw a little article you're writing about
The most risk adjusted yield. Yeah.
risk adjusted yield. Excuse me. Can you explain that a little bit more?
Well, you're going to have to factor in risk, right? If it's the latest protocol that's giving,
Okay.
astronomical rates, well, there's probably some risk baked into there somewhere.
So what do you think's the high? Because I always say anything above like 20% is like an anomaly. Like anything after that's like, how long is it going to last? What are your thoughts on that specifically for investors that want to provide liquidity somewhere or maybe go to one of these yield aggregators?
Yeah, I definitely think anything of that type of return is not sustainable. So if they're giving more tokens out, as incentive, we're going to have to see is value in aggregate getting created for that system, or is it really just being cannibalized? So yeah, each individual investor is going to have to look at that. But I think the idea of locking away capital, doing some research, finding some assets that may generate, above market returns in the DeFi space, and being able to either move that capital around, not just locking it and setting it and forgetting it, I think can be really profitable. So I think it should be a part of somebody's crypto investment thesis.
Great. On the subject of DeFi, so it's something I've been talking about on my channel. I don't know your philosophy on cryptocurrency, but personally, I'm with obviously the decentralization, permissionless technology. That's usually the route I go, but I'm also not biased and we're here to make money. So Binance Chain, obviously, it's been recently causing a lot of buzz. They've actually, from my understanding, taken some market cap from Ethereum and some of the other big cryptocurrencies. What are your thoughts on the Binance Chain fiasco and what's going on?
Yeah, well, I think anytime we see, this elevated level of demand and this constrained supply, I mean, Ethereum can only put so many, print so many blocks and only do so many transactions. Gas fees are getting higher and higher. There's going to be a market response to that. And so, Binance Chain has come as a part of it. There'll be a couple others. I think it's a natural thing to happen within markets, and I'm happy to see that. I think over time, the better technology and it's really about network effects. The ones that have the most users and the biggest networks are going to have the biggest moats, the biggest defensible moats, and they're going to win over time. It's the same reason why Facebook easily, outgunned Google Plus back in the day. Even if Google Plus was better, people had already uploaded their photos. The network effects were strong, and I suspect that will be the same in the area of smart contract platforms.
And in our case, it's like people have already taken out loans in MakerDAO,
That's it.
connected to MetaMask. And it's funny you say that because I have a digital course and we're doing Binance Chain for the short term because I believe the same thing as you with the network effects. And I have all these difficulties getting people on the Binance Chain and I completely understand the network effect thing, and I do believe that you were completely correct on that, right on the head. So another thing I saw on your articles, Elon Musk, and the whole thing that's going on with it's crazy. I know. What do you have some extra thoughts on that? Maybe in the realm of social currency, like I see a new thing happening, and it's because I'm coming from like a marketing background. Um, what's your thoughts on like social currency and these big players are jumping into crypto and now can kind of monetize it in a weird way we've never really seen before?
Yeah, well, I'll go at that two different ways. One, Elon Musk is a part of a huge phenomenon that's going to affect Bitcoin and Bitcoin holders for the coming years. And what that really is about corporate treasury management, trying to manage some long-term inflation rates and keeping their purchasing power. So you're seeing like MicroStrategy and Square and PayPal and Tesla buying Bitcoin as a part of their corporate treasury management. And they're really looking to be able to have a hedge against inflation and being able to maintain their purchasing power. That is going to be a huge theme in 2021 and 2022. I suspect 50 public companies by the end of the year will be doing some version of that. Taking that over to social currency, I mean, I really don't know where that's going to go. I think it's fascinating because value is getting generated and it's getting captured. The question then is just how value is getting created, but does it get accrued? Does it get accrued within the social tokens and does it stay there? And I don't have an answer for that yet. We're still very experimental there.
Yeah, 100%. I believe it. I think it's just a crazy phenomenon that we see. Like before, we have like all these famous people. They have obviously social currency that you can't really see. They monetize it through products or some type of promotion. And now we have like a crypto where this guy just goes on there, talks about Dogecoin, and these coins are pumping like crazy. And then people on Reddit are trying to somehow make money off of that. And I don't think there's really a strategy. So I kind of wanted to let my audience know that I'm on the same page as you. You know what I mean?
That's a disservice a little bit. The Dogecoin thing and marketing, and I wish Elon would stick away from that and stay with something maybe a little bit more. But yeah, I mean, it's just momentum right now,
I think so. And if you look at just to throw this at you, maybe you look at it later, but look at the top 100 altcoins versus BTC and then time it with the Dogecoin purchases. That might point you a little bit in the right direction from what I thought he's playing around with people
Okay.
for sure. So how long do you think this bull run's going to last? What's your kind of prediction time frame? Maybe price for Bitcoin if you want to answer that. Do you
Yeah.
think it's going to end this year? Or what's your time frame?
Yeah. So if I had to try to put some constraints around this, I would say the total value, total market cap in this run will be over 10 trillion before this ends. I think it's closer to 6 quarters from now, plus or minus. And I suspect because of its $10 trillion size in total market cap, it's regulation or government that will somehow be the either a change in government, change in view, change in regulation, change in legislation, something at that level that's going to probably be the negative effect or the crash effect that would end this cycle. But we'll keep going again. So
Yeah, exactly. Because do you think it's run by specifically the halving event that everybody talks about?
we'll have to see. This will be the test of whether we have a Bitcoin 4-year cycle or not. I am not so sure. Having definitely has a big impact. But in the past, the amount of Bitcoin being sold by miners and the amount of money that they would create such that they can manage and maintain their miner equipment was a bigger percentage terms in the olden days, a year or two ago. In the future, as Bitcoin's market caps gets bigger and bigger, the amount that they have to sell to maintain and manage that selling pressure is less in total, in relative terms. And so I don't know if the 4-year cycle will hold as hard, but we'll see. I think it will always have an effect on the market for sure.
That's interesting. I never thought of it in that way. So when you were just kind of going back to what you were talking about with your book. So when you say 60-year cycle, right? Obviously you're looking at it in a way of like cryptocurrency in general innovating for the next 60 years, right? Where do you think we are in that specific cycle if you were to guess?
Yeah, so in that 60-year cycle, I would say we are 10 to 12 years in. We've kind of completed that what's called the eruption phase, which is really excited about technology and applying this and that original disdain for old assets. And this is the new way. I can remember in the late 90s, like there were new world assets and no old assets, and if you had a .com or you were part of the internet, you were, the new school, and that's all that mattered in the 90s. I think we're, there again. The next part of the phase, I think, is a frenzy phase, as described by Dr. Colorado Perez's work, and that will be that can be quite a while, and really prices can decouple from value, and it can be pretty big mania, a pretty big run. So that's where I expect we're at over the next 4 quarters.
Okay. So you're like super duper long term bullish, no matter what. What's the worst case crypto? I mean, you talked about regulation and some type of government intervention.
Yeah,
Are you specifically talking about United States, or would it be like a collaboration of countries all together? What's the worst case for you?
it could be. I mean, and it's not necessarily a bad thing. I mean, yes, we may have a crash. Yes, that may hurt. Yes, there may be years of pain. But overall, we're going to get something that's much more productive and much more diffuse to the entire world using it, therefore being able to take advantage of it. And so, all in all, it's going to be good. It's a part of every technological revolution. So, I think we're in, we'll have to see how these go. It's always volatile, right? Anytime you have innovation or clusters of innovation like this, it's chaos. Like you don't know how these things are going to apply and work together. And gosh, I mean, you can think like just 3 to 6 months in DeFi is like a lifetime. I mean,
That's true.
so much happens. That's what's so interesting about the crypto marketplace is so much experimentation is happening.
Yeah.
And
Oh, I got a question for you. I'm speaking for the people now. Okay.
Yeah.
So let's say I'm a new guy, right? Just started cryptocurrency, maybe watched a couple YouTube videos, and because that's where I watch my information from. And I have less than $1,000 to my name. Now, obviously, you don't have to talk about specific coins, but I want to know what would be your thought process jumping in, knowing that you don't know anything, right? To not get wrecked or not lose your money. What path would you go for this small guy?
Okay, I would do two things. One is I would create a process of investing and putting regular amounts monthly into investing in, say, Bitcoin and Ethereum.
Mhm.
Just take the emotion out of it, create a process every month. I'm putting X amount in, and just that's your investment plan. That's number one. Number two is educating yourself. The way investors, especially investors of innovation, make real money is they have to have conviction and they have to have timing. And so to have conviction and timing, you got to read, you got to educate yourself, you got to understand. If you don't really understand, then you can easily be whipsawed by market events or things that happen. And so to get that conviction, if you're going to be an innovation investor, you got to get that conviction. Only way to do that is to read. I will say most people do not read books. So if you're reading articles, you're probably more in the mainstream of what most people do. If you want an edge, read a book.
That's true. So I'm going to hit you. I'm going to hit with the more entrepreneur stuff. So, I don't have time to read a book. What do you say to that?
Book on tape, audiobooks. You don't have time, then you don't have time to make money. I don't know.
Exactly. Don't put your money in the market then, right? Don't try to invest. That's good. Okay. So entrepreneurship side, man. I know you had a couple of different ventures. What would you say to a small person that maybe wants to start a business in cryptocurrency? Maybe a fund, maybe a developer, whatever the case is. What would be kind of like your step guide to having success in that area?
Yeah. So the two things I would be building are, well, first, are you more of a market salesperson or more are you a technical developer? And either way, I would start, building on that path. The second thing is network. Like the size of your network is as important as what you know. What do they say? It's not who you know, but who knows you, so people have to know you exist out there. So spending time building your network, spending time then finding out, not just it's kind of that Venn diagram of what you're good at, what skills you have, what you're passionate about. That's what's going to help drive you. I know for me, I do a lot of walking,
Mhm.
and I would just listen to podcasts. And I would either get ideas. It could be Tim Ferriss. It could be the Pomp podcast. It could be Laura Shin. It could be, any kinds of entrepreneurial type podcasts that would just get those juices flowing and my own ideas going. So I think a commitment to that, putting time into yourself, that'll get you there.
I like it. I like it. Now let's talk about some bigger guys because I do coach some of the bigger guys with a lot of money. Say you got $5 million. Okay. Obviously, we can get into the top 10 cryptocurrencies: Polkadot, Cardano, Binance Chain, maybe some Ethereum, of course, Bitcoin. What is it? Do you think hold those for the long term? Buy the dip? Are you thinking sell the top and try to calculate the top and then buy it back cheaper? Are you thinking cycle into lower market cap altcoins to increase Bitcoin, Ethereum position? What's your kind of take on that specifically for someone that has a lot of money?
Yeah. So most people think about, so there's three ways to generate market beating returns. And most people think about market timing. They think about technical analysis or trading or buy and low, sell high. And it's not that I'm against market timing. It's not that I don't use market timing. I think market timing is one tool. But people forget about the other two tools. So let's talk about those. One of them is asset selection. Like what are you going to invest in and why? For me, I use investment themes, broader themes of things that I think are going to play out over time. And then I try to build a portfolio of assets that I think will really take advantage if that investment theme pays, it starts to pay off. And so asset selection is critical. Picking a few assets on those investment themes, sticking with them, having those be the market leaders. The third one that we don't think about as much is portfolio construction. And so that is like, are we buying the underlying coins and tokens? Are we also using some derivatives? Are we having target percentage allocations? Like I want to own, 50% Bitcoin and 30% Ethereum and 30% altcoins or whatever. However that portfolio construction works. And then we make sure we have systems that, if we need to rebalance for target allocation or whatever the rules are that we're making, that we're following those rules. And so I think there's a focus on portfolio construction, specifically how correlated some of these crypto assets are to one another. If you can find some crypto assets that are less correlated, you're going to have a more diversified, stronger portfolio construction. So it's some of all of these ideas, asset selection, ideas around market timing, and portfolio construction, and having systems so that you remove emotion from the equation. That's how you're going to generate market beating returns.
I love it. I love it. Okay, I think I got a couple more questions and then we'll call it a day. So altcoins, zero, or do you think they're eventually by percentage gains going to do better than Bitcoin? And actually be something that's real tangible value rather than speculation and just pump straight hype. And when I mean altcoins, I mean things less than like 30 on coin market cap. Are we going to see some of them rise and take some dominance, or what's your thoughts on that?
Yeah. So I would like to use different terminology a little bit here for the purpose of this. And I think there are crypto asset classes. There are sets of tokens that are maybe not stores of value, maybe not reserve assets, but things like governance tokens. The idea of a governance token, I think, is really interesting. And the idea really is if the blockchain starts to create more value, then the rights to govern that blockchain become more valuable. So I would be looking in the area of governance tokens because I think it's a novel idea to have rights or access to something, and those rights definitely can accrue value. Other things like Daos. Daos aren't the right to govern that particular blockchain, but it's the right to participate in the whatever the DAO is up to in terms of activities. So there are tokens out there for DAOs. I think smart contract platforms and anything delivering on platforms or autonomous protocols. There's an entire crypto asset class of smart contract and autonomous protocols. I think thinking about these in more structured, categorized ways helps you weed out some of the wheat for the chaff. Some utility tokens that are there to do X, Y, or Z are not going to be probably as strong or be able to accrue value like something like a governance token or something that allows you to stake and yield, just because those token mechanics are valuable. They either generate cash flow or they generate or they have some rights to them. So I think it's important to look at what is the token, what type of token is it, what are the token mechanics and the tokenomics such that it's not just creating value but accruing value. And I think if you focus on those over time, it'll be easy to weed out which ones are going to, deliver market beating returns over time.
I like it. I like it. Now, one more question, then we'll finish it up.
Sure.
I just kind of piggybacking off of what you're saying. So you talked a lot about themes, specific themes. I'm in the kind of the same boat. I look for themes and I try to match my investment portfolio accordingly. And then you're also talking about categories. I do the same thing. So one category has kind of been blowing my mind recently. And maybe you can answer this. And I can't really, I don't know. I don't know why. Centralized exchanges, obviously that's a category, right? And these coins, I mean, you could look at it, they've been accruing more value than DeFi, NFTs combined, right? So what do you think the catalyst for this is specifically, and your thoughts on that?
Yeah, I mean, Binance, Binance Coin and Huobi, and I mean, all of all of those tokens, all of those centralized exchange tokens have really blown up this year. I find it hard because unless I know that they are going to relinquish governance or control or something to that token or have any reason for that token, I struggle with how that's going to maintain long-term value. So
yeah.
Unless they have a transition plan to go from centralized to decentralized, that would be interesting. But if they don't have that, I just can't. I can't justify putting a large amount of money into that. So,
I'm on the same boat. I'm a bullish uni. I'm bullish uni. I'll
great.
go with the decentralized ones. All right. So we're going to wrap this up. Thanks, Jake, for being a guest on our channel. I'm just going to finish it up with the saying that we always say on this channel every single time. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, I say it every time. If you don't get with this technology, you will get left behind. Any final thoughts, Jake?
Nope, that's it. Thanks, Alex.
All right. All right, guys. You have a good one.